Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about AMC. What is going on with this stock? Now, when we look at the chart here, you guys can see it's pretty volatile, right? It goes up and down at pretty rapid rates. It went from $8 all the way up to $70, back down to $40, back up to $65, sold off down to $30, back up to $50, back down to $36. So there's a lot, there's quite a bit of volatility. And anytime you have a stock that carries volatility, what it carries is risk because of these massive swings. So pretty much a beginner trader or beginner investor may look at this because we'll see this huge run and they'll hop into this thing thinking it's going to hit $90 or $100. But realistically, when something goes up this fast, it has a tendency to start selling off a little bit and then just trying to find buying pressure. That's the main idea and the main goal when a stock spikes up this much. So there's always going to be a lot of risk and a lot of, reward overall with AMC, just because you could have hopped in right here at 36 and it could go back up to 70, right? The idea is unknown of how high this thing can go just because of these short-term squeezes that it's had. So here's the thing. Anytime you evaluate a stock, there's a variety of things you look at. Okay, for me, when I look at the chart, I need to find support and resistance. So resistance is when a stock has a consistent tendency to sell off at that price zone. Support is just when it gets buying pressure and it goes up in value pretty much. So you can see it has a tendency to sell off here at about $65, right? You can see this wick here. Anytime there's a wick that represents selling pressure when it's above it, and when it's below it, so kind of, let's see if we can see one. There's really not one. Kind of in here, it represents buying pressure. Okay, so you guys can see selling pressure. It sold off, got bought up here, hit that 65 mark again, sold off down, and started getting buying pressure right in between 30, 34, and about $29. Right in this zone, it has this tendency to get buying pressure, to get bought up. Right, so you guys can see it's hit it, and we got buying pressure back up to about $50, and that is another resistance. This is going to be a hard thing for the stock to break above. So then it sold off down to this 36 mark. So what this stock is using is a variety of things as support. Okay, the first thing is you see this green line. The green line is a moving average line. So the green line is pretty much, it has a tendency, when a stock is above it, it has a tendency to act as support, just like it did in here. We got buying pressure several times, and even in here, it's just having a hard time breaking above or breaking below. It's getting bought up there. So, not to mention another thing the moving average line acts as is an overall indicator of the trend. So you can look at it and instantly know the overall trend. So you guys can see it's just going up and it's starting to flatten out, just consolidating. So here's my opinion on AMC right now. Okay, just from looking at the chart. A good opportunity to buy would be start dollar cost averaging at 36 and buy more at about 30. Okay, setting stops below the 200 moving average line at about 26. Ideally, if it continues to sell off, you'd want to get your average price down to about $31. Okay, because then if you did that, you would virtually risk a couple dollars for this. You could risk about 2 to 3%. For this stock to turn around and come back up to this resistance at 50. So that's the ideal trade behind AMC. But here's the thing, is volatility. This thing goes up and down at rapid rates. So another thing you need to look at is the fundamentals. So when looking at the fundamentals, you can see that AMC, their past revenue is up quite a bit, okay, compared to the previous ones where we've had a lot of declines, massive 76% decline, and now just a massive increase. I think this is because they started selling some of their shares, but it's still good to see that they're having an increase there. Not to mention, by far the most important thing for AMC is this, cash on hand. The cash on hand is extremely important because if AMC ever slows down, they need this cash to get through a hard time, to get through a recession or a depression, very similar, to what happened a couple, 2 years ago or a year ago now, where everything got shut down. AMC had to take on debt to actually grow the business and to keep it afloat because they had very little cash on hand. If we actually look at it, back in the day, they had, not even $1 billion, 300 million. And if you compare that to the long-term debt, they have about $5.7 billion, which is a lot. Okay. Now, the biggest thing is you always want to make sure whatever company you're investing in for the long term is going to be stable. And AMC is by far the most unstable stock out there. It has these massive price movements, which, yeah, you can make money in the short term, but for the long term, it's just going to carry some risk, okay? And if you're fine with risk, I would recommend definitely going under like maybe 5% of your portfolio. So for every $100 that you have invested in the market, put $5 into a company like AMC. That is just my overall opinion on it. Not to mention, guys, dollar cost averaging is a good way to get a good average price for your shares so you can use the volatility of AMC to your advantage. Anytime it sells off, buy some more. When it continues to sell off, you're just averaging down your prices. And then when the stock recovers, just like it's done in the past, you can make some money off it. So guys, that is my overall opinion on AMC. I hope you guys enjoyed it. And overall, I hope you guys got something of value out of this video. And we will see you guys later. Remember to stay happy, stay positive, stay safe. Take care.